Well, welcome everyone. This is David Morgan of themorganreport.com. And today we have a kind of a special treat. We added something to the website very recently, and it's a Canadian flag that says RRSP, the RRSP program. This was brought to my attention years ago by my Canadian friends. By the way, about 40% of the Morgan Report members are Canadian. And because of that fact, we decided to make an agreement with Brandon White, who I've known for quite some time, that's quite accomplished in the precious metals arena. And he has a gold coaching program, basically. And I'm interviewing him today. So he is on our website. He's also independent of us. But as a courtesy to all our Canadian friends, we wanted to basically put it out there because, as he will explain further, a lot of people, both in the US and in Canada, didn't even know that you can put precious metals in your retirement savings. So, Brandon, welcome here. Can you give us a bit of your background?
Sure. Yeah. Great to be here, David. Thank you. Well, yeah, I worked in the in the investment world for many years, serving investment professionals and advising on the merits of including physical precious metals as part of an overall approach to investment savings, reducing volatility, steadying returns, having something tangible, and portfolio insurance against some disastrous potential scenarios. And then got involved with the mining industry, helped set up a resource exploration company back in 2012. So I sit on the board there. So yeah, I got my hands in a few different cookie jars, but it was probably my experience serving the investment professionals across the country that motivated me most to launch Your Gold Coach and to work with you and to bring forward the opportunity for Canadians who are interested in acquiring physical gold and silver, especially in their registered plans, whether it's RSPs or TFSAs, LIRAs, whatever, just helping them walk them through the process. And it's fun. I get to talk to people coast to coast who are very much awake and aware of what's happening politically, economically, and it's very different when I walk outside of my apartment to talk to people on the street. Most people don't seem to care or know what's going on. So yeah, it's fun. Get to talk to people like you, David.
Well, thank you. And as you know, and most anyone that's really listened to us more than maybe two or three times, that I've always advocated that everybody really have some precious metals, and there's so many reasons I won't go into any of them. But that's the first step. In other words, I don't even want a membership from somebody that hasn't purchased physical metal. That's your foundation. That's your fail safe. That's the worst case scenario. Or it's appreciation. I mean, it doesn't have to all be doom and gloom just to get price appreciation. I mean, you can look at palladium market as an example, really classically a monetary metal, but not really used as such. So, I mean, palladium investment a few years back in the sub $1,000 level looks pretty good today. Anyway, the Morning Report, of course, does both the equity side, options, futures, mining companies, big, middle, and small. So that's our core business for the membership. But again, for the overall portfolio, you need precious metals. So we had a chat before this interview, and it's one of the most important things that have been asked, and it's very seldom addressed. And we got into the discussion. I said, we've got to do this, Brandon. And that is why your investment advisor never recommends precious metals.
Yeah, well, it's a bit strong. I would say that probably 95+% of investment advisors won't do it for a variety of different reasons, especially silver. And it comes down to, unless you're in the investment world, you wouldn't know what happens behind the scenes. You know, you show up for your meeting with your advisor, he's got all the paperwork ready, you have a lovely conversation, how are the kids, and maybe 5 minutes is spent actually talking about the actual investment portfolio. But the reality is that the limitations imposed on investment professionals is largely, in addition to probably, actually the biggest one would be ignorance. Most investment professionals simply know nothing about it, or that you can even do it, or why would you? But they're up against an enormous obstacle, which has to do with the regulatory environment and compliance and the rules and how you position clients in different types of investment products. And the environment in Canada changed, I would say probably around 2015, 2016, somewhere in that neighborhood, where the Canadian regulators decided that they were going to adopt rules that had been implemented already in Australia and the UK using this is fancy jargon, so I'll try and keep it so it's relevant to everybody. It's risk methodology, which means how do they rate investment products in terms of client suitability to the ups and downs of the market, right? I mean, an 80-year-old lady on a pension is a very different type of client than a 40-year-old guy with 9 figures in the bank. So every client has to get vetted by an investment advisor as to where they fall into on their KYC, which stands for Know Your Client. You know, what's their risk appetite? And so what happened was that the rules changed in how risk was measured. And they elected arbitrarily, in spite of many investment professionals, up in arms against this arbitrary decision, to go with standard deviation, which is a way of measuring the ups and downs of any kind of investment. And what it did immediately was any product out there that was sector specific, almost always almost all of them would have wound up moving to a medium high to a high risk, which means they literally cannot recommend these types of investments. So if you don't have a balanced portfolio managed by a portfolio manager that has some fixed income, bonds and some equity, and there's different types of mutual funds, for example, out there. But most of the clients, most investors in Canada, they're pretty much all mutual funds. There's a growing number of people managing their own investments and being more tactical, but for the most part, investment advisors literally would have their hands slapped. It was so bad that the few advisors in Canada who had been placing their clients in physical precious metals products, not directly held, but there's mutual funds that are out there that they were putting them in, they had to tell their clients they had to sell them because of this new rule change. And of course, people who buy gold and silver typically are very passionate about the subject, and some of them really got angry at their advisors and the dealers, but there was little that could be done. They were forced out of their positions. Many advisors I knew in the business were literally forced out of the business because they refused to comply. So this is the environment. It's literally, just classic example of central planning and government directly intervening in the free market and causing all kinds of headaches and problems for what they think is for the greater good. And it's a microcosm even within the investment world.
I was at an investment conference. I've been in many, but one in Las Vegas, and it was the money show. So it was more broad based than some of the investment conferences that are primarily focused on the resource sector. And in this particular one, I ran into, and he was way up the ladder. I think he was actually president, and I forget the acronym, 3, 4, 5 letters. Basically, he's the head of the Certified Financial Planners, call it Guild. And any CFP in the U.S. is similar to a registered investment advisor in Canada, both registered investment advisor. And I said, why don't you guys ever recommend gold or silver? And he said, similarly what you said, although he didn't quote any laws or anything. But I retorted with, well, the Ibbotson and Associates study, CPM group study, there's one at Harvard I've never seen. There's several portfolio analysis by independent objective authorities that say the best portfolio performance has physical gold in it, period. End of statement, no argument, it's a fact. So I said, if we have a big sell-off in the stock market and some of your clients get a hold of this information, are you vulnerable for a lawsuit because you didn't recommend the fact that you need about a 15% weighting in gold for the best portfolio performance? And you know what? You basically walked away from it.
Yeah, well, you raise an excellent subject. This is another thing that is extremely top of mind when it comes to investment advisors and the respective compliance departments is the potential for litigation when clients lose money. I saw a study a number of years ago and it was interesting how inverted it was. 63% of investment professionals think they have a close relationship with their clients, but only 36% of clients felt they had a close relationship with their advisor. There's a lady by the name of Ellen Bessner who wrote a book specifically geared towards investment professionals on how they can avoid being sued. So this is a genuine, real fear for most investment advisors, and their compliance departments are even more fearful of it, that the portfolio goes sideways. They were offside with KYC rules. They put them into something that was too risky. Now the client can hire a lawyer and they can sue and they can win. So the investment advisors, not only are they worried about the compliance, they're worried about being sued personally. So this really discourages them from wanting to push anything that might be considered risky in case there's a big downtrend, and the client gets it, because clients, it's nothing personal, it's just my life savings and I want it back.
Yeah,
that's the mindset.
exactly. Well, let's examine that a little further. Let's take a hypothetical. You've got Mr. X, and he's got a family, and he's got a wife, and his family's out of the house. He's 62 years old. He's going to retire in 3 years. He's got a $2 million portfolio. He believes everything from a certified financial planner. He has no exposure to precious metals whatsoever, and the market goes down 80%. Now that 2 million is worth, 200,000, 400,000. Can't retire. He's mad as hell, and he gets on the web and he finds this discussion, and he realizes that objectively, if he had gold, and at the same time that the stock market goes down 80%, gold rockets up, let's say, a factor of 4. And of course, if he had a 15% weighting, he'd be a little better than breaking even in total. So he discovers this, he discovers this chat you and I are having, or whatever. I'm just giving a hypothetical. And he determines that his certified financial planner did not do their job. Because if they did their job, they would know the best portfolio performance requires a weighting in gold. Doesn't mean gold only, doesn't mean gold stocks. It means gold. So, this is, to me, something that will happen in the future. My numbers are hypothetical. I think the stock market's going down. I'm allowed to say that. I think gold is going up. But regardless of what I think, what we know is that if you don't have gold in your portfolio, your certified financial planner is doing you a disservice based on not what they're told to believe about the risk profile, but what the truth is, which is that you need gold to mitigate anything else in the other financial arenas. It is countercyclical to stocks and bonds, even real estate in some cases. So, would you like to comment on that comment?
Yeah, I agree with you 100% that there is the potential for investment advisors to be sued because they weren't putting gold and silver in spite of there's mountains and mountains of technical data showing clearly that you raise that efficient frontier by putting a little, even 10 or 12.5% can dramatically reduce the overall volatility, and it's all simple math. It's not rocket science, but and it's compounded with, it's even more confusing. I was in direct communication with OSFI, so your American listeners wouldn't know. Actually, probably most Canadians don't even know who OSFI is. So the top financial regulator in Canada is OSFI. It's the Office of the Superintendent of Financial Institutions, and the Bank of Canada actually takes its marching orders from OSFI. So I was in direct communication after being redirected by the Bank of Canada with OSFI as it related to gold's risk rating here in Canada. And just as it is throughout many developed countries who've applied the new Basel III banking rules for liquidity and solvency and such, in Canada, physical gold held in trust or in your direct vault is considered on par with AAA rated sovereign bonds and cash. Right, but you can't put it in an investment portfolio because the provincial regulators are saying it's too risky, which is absolutely absurd. So this knowledge and this information hasn't filtered down yet to the retail advisor. It's still very, very high level and relatively unknown. And coming back to the mindset of the investment advisor, not only are they worried about being sued, there's a dirty little secret in the investment world amongst many investment professionals. Not all. There are some fantastic investment professionals that I've had the privilege of meeting and knowing, but it's not uncommon to encounter an attitude in the investment world where an advisor secretly thinks, well, I don't have to worry about it. Nobody gets fired for being average. It's right. It's a terrible attitude, but it's prevalent. And a lot of investment advisors out there, especially the ones who they'll sign on a client, the money will move over, and the client will never hear from the advisor for 3 years. Plus, the only reason why they do is because he has to do every 3 years at least touch base with the client and see if their financial position's changed or he's offside with compliance. Meanwhile, the advisor is collecting revenue from the funds that they're invested in, but they're not giving any advice. They're not. Anyways, the industry is upside down, and many of the old timers, I would say, who've been around for decades, they're quite happy to sell their book of business and get the hell out of Dodge.
Right. So I'm going to keep this short because we're going to do kind of a series of these because there's several things in the financial arena that most people aren't aware of. But let's just stick on a topic, and that is, okay, I'm on the website. I see this RRSP program. I click it, and of course, there's kind of a landing page there, and it talks about you want to learn more. There's a short video that we have, talks about how it works. But what I really want to go into, and this is how you get started, you don't give a name, and you're going to get a call from your gold coach, which is you. The reason I teamed up with you, and you're independent of me, but we're working together for the RRSP program, is your dedication, your knowledge, and really it's your your ability to be real and build rapport with each and every client. I don't do that. I'm very close to my people. It's a boutique kind of an environment. I mean, I'm not one of these massive publishing houses that have, $1 billion a year coming in from, 100 newsletters. I have one, but I like the way that we approached our client base because it's very similar. And that's, I think, the key reason. I mean, your knowledge is important. I mean, you got to know what you're doing, and you definitely do. In fact, probably of everybody I've met in this arena, you probably have more insight into what we've already discussed, which most people are oblivious about, and why it's not that hard to do it, but you're there for them. So why don't we just go through another, what happens when? So I get on here, I fill out everything, I send it off. What happens next?
Well, I would reach out to you and see what it is that you're looking to do, what type of registered plan you have. I like to ask a lot of questions because everyone's different. They're in different situations, different stages of life, different net worth, different concerns, different ideas and beliefs. The guy who's absolutely adamant gung-ho that silver is the place to be, right? That's what he doesn't want to talk about anything else. He sees what it is. He sees the silver to gold ratio. He knows the distortions in the markets. He knows the limited supply. He's done his homework. He knows silver is what's right for him. So he's very different than someone who's, let's say, let's take an example of someone I spoke to today. She's 71 years old. She's very concerned that, what little she has in savings outside of what she gets from her pension is going to vaporize. And so she wants the predictability and stability associated with gold. She's not worried about speculating on the upside and silver outperforming gold. She wants to just make sure that what she has doesn't blow up. So, depending on where they are in life, what their concerns are, we'll go through all that and filter it all out. And then once we've kind of got a sense, what it is they're trying to achieve and what it is they're trying to do, then that's that part that's the fun part. The rest of it is just work. It's you go on to the brokerage firm, you open your account, I hold their hand and show them through the fields, and you got to upload this, and how do you transfer it? Most people don't understand the transfer process of moving an investment registered savings from one institution to another. They think it's a taxable event. It's not. So I advise them on, coach them. I have to use the word coaching. I coach them on the process and how to not make any silly mistakes like withdrawing funds out of a registered plan to buy. I've heard of that happening in the past, and they get nailed with the taxes. So I make sure that they navigate it in such a way that they avoid any tax pitfalls, they avoid any mistakes. We can help guide them through how to save money on foreign exchange, literally the whole process. So I do my best to take the worry, the stress, and the anxiety out of it and just guide them through the whole process, stem to stern. And the comments that I'm getting are just fantastic. The support and, referrals have been literally pouring in because it's a pleasurable experience. They just want someone to coach them through it. They know they want gold. They just don't know how to do it. So that's what we do.
Well, it's excellent. And I'm very, again, happy to be associated with you. And I think I'm going to leave it there for now. There's going to be, I don't know how many, I'm going to guess 3, 4, 5 interviews with you. The next one, I'm going to send out a teaser, and this is something we discussed offline. That is, in the investment arena, what do you really own? And that sounds preposterous for people that are, let's say, less or undereducated in these matters than, let's say, someone of like you and I, that really dig deep and know what the facts are, because there really are only a couple places where you are actually the owner. The rest of the time, it is in a clearinghouse or some type of entity. Even the bank, as you know quite well, I'm a little off topic, but it makes the point of what do you own. even your bank account. It's basically you are an unsecured creditor. You really don't even own the cash that you deposit in the bank. And yet, you tell that to 96% of the population, they're going to think you've lost your mind. But if you actually have the capacity to look it up, you'll discover exactly what I'm saying. So I think there's 2 or 3 items I want to go into the next interview. How do we get a hold of you? We went through who you are, why we're associated. Your expertise comes through loud and clear. I don't think anyone listening to this interview wouldn't get that right off the bat. And also your personal touch. This is something that I want to do it, and that's sort of a very needed step in my opinion. It's like I want to do it, but I'm scared and I don't want to get taxed. What if I goof it up? Oh, I'll just stay in this mutual fund I'm already in. It's losing money, but well, you basically, for lack of a better term, hold their hands all the way through the process, which is key. And then I think, of course, I'm biased, but I think everyone that has the proper exposure to precious metals, as you gave that 71-year-old lady, perfect example, and that adheres to my philosophy, as you know. When you're a premium member, a paid member, first thing you're supposed to do is read how to use the Morgan report. And the first thing I talk about is physical precious metals allocation. And I'm not a dealer. I don't sell precious metals. But it's important. So important, I put it number 1. And in that, I outline what you just said, Brent. If you are older, you should favor gold over silver. And if you are younger and want to take a risk, certainly you can favor silver over gold at that time. So as we get older, gold's really a wealth protector, wealth preserver. It doesn't change. An ounce of gold is an ounce of gold anywhere in the universe. What changes is what's the paper price to it. So I had to laugh when you started off telling us about how the authorities look at risk. The risk that they're looking at is how unstable their currencies are.
Absolutely.
Constant.
Absolutely, yeah. The using standard deviation implies that the dollar is the benchmark of stability, which is utterly absurd.
Yeah. Exactly. Anything you'd like to say before we close out? Because we are coming back, and we are probably going to make a few of these because but I want the most important part. It's on the website. They get to speak with you. Your gold coach has their best interests in mind, and we're working together because we see things in so many ways. And I don't have a lot of Canadian exposure outside of membership, but this gives that ability now. And so thank you for coming on board with us.
Oh, it's my pleasure. I love the people that I serve. I would suggest that anybody listening who wants to, explore how to transfer a portion or even all of their investment savings into physical gold and silver, I don't necessarily advocate all of it, that they go to your website. That way I know where they're coming from. You can go directly to mine, but please tell me that you heard about your gold coach through David Morgan. So I want to make sure that David gets credit. But yeah, I'm excited for the next meeting. Henry Ford, I often quote this. Henry Ford said that if the people ever figured out the banking industry, there'd be a revolution by morning. So to be able to explain and expose some of the hidden machinations of the banking industry, I think it'll put a lot of people's hair on fire and maybe encourage them to look more into assets held directly in their name.
All right, Brandon. Well, thank you for that. Until our next interview, I'm wishing you health above wealth, wisdom beyond knowledge. This is David Morgan of the Morgan Report.
Thank you, David.